What's been the best investment over the past 10 years? That's what I'm going to show you in this video, along with a really neat visual tool where you can see how that best investment performed from year to year. Because if you've seen other videos on my channel, you probably already know I don't like those lump averages. I like to see how an investment has performed from one year to the next so we can learn more about our investments based on how the volatility is among the particular asset class that we're investing in, whether that's stocks, bonds, or something else. Hi, I'm Camille Gaines here and on my website, retirecertain.com. I write about and talk about investing. I'm not selling wealth management services. I'm not a financial advisor, although I am an accredited financial counselor. I just like investing, and here I talk about what I've learned over the 40 years that I've been investing in just about everything at this point. I'll see you at my computer. Okay, so here we are at my computer, and you can see the major asset classes on this beautiful investing quilt that was put together by Novel Investor. And we can see from looking at this that the different asset classes have all gone up and down over the various time frames. We've got 2008 all the way up through 2022. Which investment was the best during this time frame? You could probably take a guess and get it right. It was large cap US stocks, and that is as represented by the S&P 500 index. Over the past 10 years, those investments had an 8.81% annual average return. Now keep in mind the returns on here are including income that you get, whether that's dividends from stocks or interest from bonds. So this is the total return, it's the average return. What was the second best investment over the past 10 years? That was small cap stocks as represented by the Russell 2000 index, and small caps had a 7.16% return. Like me, you may have heard that small cap stocks outperform large cap stocks. Let's remember that this is only a 10-year time frame. So if we looked at a 20-year time frame or a 30-year time frame, we might find that to be the case. If you've looked at any of my other videos, you probably know that I really like to look at 30, 40, really 50 years worth of performance data in choosing an investment. But I also really like to see what has been the best investment over the past 10 years so that I can learn from that. I can remember what was happening during those 10 years, and I can look at the performance and say, oh, well, okay, this investment went down because this was happening during that time frame. And I think that's how we become really better investors and improve our investing skills. Now let's take a look up here. Now that we know large cap stocks were the best investment over the past 10 years, they are the orange blocks on here, and we can take a look and see how much volatility there was in the large cap stock, that asset class, over the past 10 years. And we can see that it wasn't the worst asset class in these lower three rows. It represented the better performing or middle asset classes over the investing time frame that's shown on this quilt. We can see, however, that in 2008, in the midst of that horrible bear market, when the S&P 500 went down about 55% overall, that 1 year the S&P 500 was down about 37%. Yikes. But we can see it bounce back the next year at 26.5%. And then we can just take a look and see how large cap stocks performed over the past 10 years on this investing quilt. Like here it was only 1.4%. Here it was 2.1% average annual return. Here it was down 4.4%. And here in 2019 it was up 31.5%. In 2022, large cap stocks were down 18.1%. So this is kind of surprising because we feel like stocks are a stable, really safe investment, but we have to remember that there is a lot of volatility in the stock market, And that's reflected certainly on this investing quilt with the different blocks. You can go to my website if you want to take a look at these other asset classes and dig a little bit deeper into this investing quilt. It's got some fantastic information. I'll put a link in the description under the video where you can see this article on my website. So small cap stocks were the second best investment over the past 10 years. Let's see how small cap stocks did. They are the blue boxes here. And it's sort of surprising that small cap stocks were down a little bit less than large cap stocks in 2008. And then we can see, sure enough, they had a little bit bigger bounce back than large cap stocks in 2009. And then we can see here that small cap stocks outperformed large cap stocks in 2010. And here they underperformed. So relatively close to each other, the small cap and the large cap stocks, those two best investments over the past 10 years, they're relatively close to each other, which really makes a lot of sense. And their performance is relatively close as well, as you can see, with the average annual return for the large cap stocks being 8.81% and the average annual return for the small cap stocks being 7.16%. So what was the third best investment over the past 10 years? You can see that it was real estate, as represented by REITs. Those are the red boxes up here. And it's really interesting to note that even though large cap stocks and small cap stocks were the best investments over the past 10 years from a performance perspective, that REITs were the very best investment in 6 of the 10 years with the highest return. You can see here 1, 2, 3, 4, 5, 6. But we can also see that REITs were down here at the bottom in 2 of the years, a very worst performer. So a little more volatility, surprisingly to me, in the real estate sector, in that asset class. The other thing to remember is that some of that return from REITs would have come from income, because REITs tend to pay a higher yield than stock yields. So some of that total return would have definitely come from the income that was received by the owners of the REITs. So we can see from looking at this investment quilt that sometimes some asset classes go up more than, outperform, and the next year they may underperform. Asset classes move. Now, during this time frame, it's also really, really important to point out that over the past 10 years, the Federal Reserve has done a lot of accommodative actions that helped stocks go up in price, assets in general go up in price. So now that we have already had that happen, we can look at this with the perspective of knowing that was happening, and we can also ponder what lies ahead. How will the change in that affect our investments moving forward? You may have heard me say here, I'm not a buy and hold investor that just buys a certain percentage of stocks, a certain percentage of bonds, and holds onto it no matter what. I actually invest based on macro factors, based on what's happening in the overall financial markets, so that I don't have to ride out bear markets. I don't like riding out bear markets, even though the last 2 or 3 haven't been too bad. I guess the past 2 haven't been bad. I went through those bear markets in the early 2000s decade, and I don't like to ride out bear markets. I explain this more in another video, the Allocate Smartly review video, which I'll put up here. And remember, retire certain.